morning and welcome, Patriot Radio News Hour. Joe and Jason on this Wednesday. It is Fed Day Wednesday. Our toll-free number 800-951-0592. The website at allamericangold.com. And I hope it finds you well out there as what the December, marching on the 13th day of December. I have to wish my wife happy birthday. We'll say 29 again, because you know how that goes. But happy birthday to my wife. I hope you have a fantastic day. And having said all that, it looks like Jason was here, now he's not here, he's back here. It looks like some technical difficulties. Now he's trying to come back in, but we will have the Federal Reserve today. Everybody out there is hey, we're not going to raise rates, but are we going to? What kind of talk are we going to get? Right? What kind of talk? Yeah, are you gonna give any hints as to rate cuts? I mean, forget about inflation. That's what they want to know. The dot plot, right? That's always one of my favorites. They put a lot of stock into where all these Fed governors are going to say they think the Fed funds rate is going to be, say, in March of 2024, in June of 2024, and probably all the way out to July. Here's the thing that I think is kind of funny. It absolutely has no bearing on what actually happens. I would love it if they would, hey, let's look at all these dot plots over the years and see how clueless the central bank really is. But I think that'll be one of the main indicators is going to be what they decide to do with the dot plot. We'll see. I'm not expecting much either way. I think they're going to still try to talk tough. Some of the data is softening. We're going to talk about that. Got some inside information when it comes to evictions, when it comes to repossessions, and then what's going on the business front. That'll be all coming up this hour. But we did get another inflation number. This was the producer price number. And this number was really good. So here's a number when you say, hey, no more rate hikes. This is firmly that. This firmly says no more rate hikes. And then on top of that, could it get to rate cuts? But the producer price index, thanks to more drops in gasoline, 0.4% decline. So that is obviously a good number, month over month, a 0.4 decline. Pretty much all of that had to do with gas, but that's all right. We'll take it. Excluding food and energy, also better than expected. The core now 0.2%, by the way. The number that was what they were expecting. It was unchanged. So no change. So no producer price inflation when you take out food or energy. 0.4 decline when you include food and energy, which is mostly energy. And then year over year, the producer prices was at 2%. So that is a really good number. They said that the food and service did inch higher. Apparently egg prices got expensive again. I don't know, but that's what they're saying here, a 58% surge in egg prices. Final demand unchanged in the month. So, again, all in all, a pretty good report as far as hey, we want to see the Fed start cutting rates, and also the Fed is done raising rates. Now, we'll have to wait and see for the Jay Powell press conference as to exactly what it is that they're going to say later this afternoon. But I think, again, right now, gold's up a little bit. Silver's down a little bit. Wall Street is, well, pretty flat today as bad news, I guess bad news out of Pfizer. Nobody's taking the vax drugs, and now they lowered 2024 guidance as well. Profit forecast disappointing. And then Tesla having to recall a software fix, recalling 2 million cars over the, well, I guess it's the auto loan defect, or autopilot defect. Yeah, don't use autopilot yet. I don't think it's quite ready. And then, of course, we also got the budget numbers for November. Last year, and this is how fast things go. Last year, $249 billion was the deficit. Now, remember, October's usually, in the old days, October used to be a positive because you either pay taxes in April or you pay them in October by and large. But November this year, $314 billion deficit. So you look at it, you're like, okay, that's $55 billion more than it was going back last year. That's like 20%. By the way, the first 2 months of the fiscal year, the deficit now just below $400 billion. That is also up significantly from last year. So already kind of, staring $2.5 trillion in the face. We'll be back after the break. 800-951-0592. Joe and Jason, Patriot News Hour here on this Wednesday. A quick look at the markets. The Dow's pretty flat here, up 15 points. The S&P's up 6. The Nasdaq's up 30. Gold's up 5. Silver's down 12. The 10-year note, any indication, again, we got that softer consumer or producer price look, 415. That's right at the lows that I've seen. So we'll watch what that does after the Fed announcement today. But when we start looking at what we have coming, we've got a lot of new information about what's happening with primarily the small business guys. We got an update on the used car market, as well as what's going on in evictions. Well, and I shouldn't say that. I'll know about evictions here in Arizona continuing to be a massive problem out there. But if rate cuts are coming, I have a feeling that there's going to be a lot of pain in the equity markets before they do, because that's normally what happens, right? You don't start cutting rates and then Wall Street starts dropping, right? 2024, we've said this for a while because of what's going on with the reverse repo money. I got an update on that. So a lot of things to update today. Being diversified. You got to have your gold and silver put away. We've got 2 great specials today, by the way. But something not tied to Wall Street. I think it makes good sense. I'm not saying, am I saying, hey, take your whole IRA and put it into gold or put it into Y refi? No. But get diversified here. If you got $50,000 or more to invest, look at Y refi. Up to 10.25% return. You guys know that. You say, hey, let's go 5 years. You're paying 10.25% every year, month after month. You can turn your income on, you can turn it off. You know all that. But now they've made it even better. Let's just say you want to go 1 year. They're going to pay you even more interest now, 6.5%. 2 years, they pay you more. 3, 4 years. They're upping the amounts they're paying. They already had a great program where, hey, you know what? Something happened. I know I said I was going to go 5 years, but I need that money. You already were getting all of your principal, all of it, no questions asked. Not anymore. Now they're going to give you some of that interest too. Yeah, think about that. Even though, hey, I can't make it to the end of my term, and the closer you are to the end, the more interest they're going to give you. Check them out, guys. InvestYRefi.com, or just call them at 888-YRefi24. And Jason, I know Jason's been battling some technical issues. You look great. You look great. On Jason's end, he looks pink. On my end, he looks like Jason. So maybe your laptop over there is worried about breast cancer. But I think that was last month. Well, actually, that's 2 months ago. But we were talking debt. I think there's another big one. Now, I gave you the numbers. We're on pace to have a significantly larger budget deficit. Now, remember, because of some paper games, every headline you see tells you the deficit for 2023 was $1.7 trillion, which is crazy. But it was actually $2 trillion. They did the student loan when Joe Biden wasn't allowed to forgive the student loans. They had already added that number into the 2022 deficit number. So 2022, the deficit was actually a little less than they reported. It was only $1 trillion, really. So now they've added it back. So we're going to see a budget deficit just based on this. Just based on this, we're going to be at least at $2.4 trillion, and I think it's going to be worse than that. Interest on the debt. Now, last year it ended just under $700 billion. And, of course, I'm telling you, listen, interest on the debt now is $1 trillion. Let's look at that. Interest on the federal debt for the first 2 months, $66.3 billion higher. Now, we already know they're going to be rolling over bigger numbers, right? We know the Treasury, they're going to do another special auction in January. And, of course, let's face it, somehow, some way, they want to give Ukraine more money and everything else. But let's just take that, multiply it by 6, right? So, 12 months in a year, first 2 months. That's another, I'm going to round up here, $400 billion of interest. That would put us well over $1 trillion worth of interest on the debt. Now, here's the good news, right? If they start lowering rates, Jason, that number will come down a little bit.
Well, maybe it depends on the spending, right? It depends on the accumulating interest. If the interest the interest is spiraling now. It's going to gain so much steam that I don't know if just cutting spending is going to slow the amount of debt that's piling on to the national debt. I mean, I haven't checked. I mean, we're moving perilously close to 34 trillion. Looks like we're $88 billion away from 34 trillion. And I don't know if slowing the spending is actually going to, I guess it would slow it. I guess you're right. It would slow it. That's all. It's going to keep going up. Remember, anyone who's listening, there was never a provision once the Federal Reserve came into power in 1913 by our federal government there's never a reason to pay the principal on the debt. It's never supposed to be paid. We're supposed to always add debt to it, and we're always supposed to be paying interest on the debt. This is how these guys enrich themselves as private companies, private corporatists, which are the bankers. And, Joe, if spending went to zero, I still think, well, if increased spending went to zero, if we just froze spending, it would still go up, and it would go up very rapidly. So, these guys in Washington, Joe, all of their pet projects, all of the people that they represent that's the only thing that matters to these people in Washington, D.C. They have to spend more. They have to increase budgets, and it's just there's got a day of reckonings coming of some sort, right? That's why we've been talking about a reset and all these other things. So the last worldwide economic reset, it was called World War II. And it doesn't seem like World War II type events are just heading our way, Joe. That's really what it feels like. I think most of the people that look at this stuff know something's going to happen. We just don't know what exactly it's going to be.
Yeah, and that's kind of the problem here. And one of the other dangers, you got to understand what they did. They added 30, 40, really close to 40 trillion when you count the Fed's balance sheet. Just under that, right? We're 34 plus 8, right? 42, about 37 trillion. And we had a $5 trillion budget deficit. And they took rates to zero. And they added all of that money. Well, here's the thing that happened. Think about for like the first 10 years of zero. All the treasuries that rolled off. The Fed had been paying interest rates, right? They had been paying 4, 5, 6, 7% interest. Now, granted, they were borrowing a lot more, but heck, they had to hardly pay any interest. Any of you, I'll give you a great example. This will make it easy for some of you to understand. Think about what your mortgage payment was at 3%. Now, you locked in at the bottom, and you got a 30-year fixed at 3%. Take the same amount of money, put 7% in there, and see what happens. Right? Your payment more than doubles, right? I mean, it's huge. It's a huge increase in that monthly mortgage payment. This is what's happening right now. All this debt that they're rolling off that's got to be renewed, right? $8 trillion has to be renewed on top of all the other spending. So we got to sell well over $10 trillion worth of debt. Well, the debt that was rolling off, what did they pay? 0.5%? 1%? Right now they're paying 4 and 5%. It's way more expensive, but they fooled us because people thought, well, look, gosh, we borrowed $35 trillion in the deficit. I mean, yeah, we had some bad ones, but it wasn't that bad. Right? It wasn't that bad. I mean, if you throw out COVID, the debt right now is horrible if you throw out COVID. Why wasn't it horrible 5 years ago? Why wasn't it horrible 8 years ago, 10 years ago? Well, the reason why was they had rates at zero. So they were able to hide how bad the problem is. And of course, I don't think we are ever going to be able to go back. Oh, I guess we could, right? Anything's possible. Right? We can just say, the heck with it, and just start, spending money like crazy. Think about the spending that's going on, because I didn't even talk about that. How much more spending the government's doing. They talk about, well, we don't want to give Ukraine more money, and we're towing the line, right? We're continuing resolutions. All this they've done is kept the spending at the same level. That's what they've told us. Well, when we look at the numbers, outlays for the first 2 months were up $88 billion. So not only did to the point, and you got to remember, well, what's the pace? Well, we're going to spend a few percent more. That's exactly what it is that they're doing. They're spending almost, when you look at the outlays, $88 billion more. That's $44 billion a month. I mean, Jason, that's an extra $500 billion. You can throw the interest on there, another $400 billion in interest. Look at what you got. Well, I guess I'm double dipping. I can't do that.
Well, and the Fed's balance sheet is shrinking, right? That's supposed to be the good news, right? But I think there's only two ways, right, Joe, in which that balance can go down. The debt can expire, or they sell the debt, and there's not a lot of countries wanting to buy tons of this debt. So it makes me wonder. Makes me wonder where that debt's going, right, Joe? To slowly bleed off that balance sheet. Makes me wonder if you take it off their sheet and you put it on the national debt sheet, right? Because the government has to sell these treasuries, sell these treasuries, sell these treasuries, but that doesn't mean that they can't buy them or buy them back. It almost feels like the Fed wants to get this off their sheet as fast as possible, right, Joe? Because the national debt's never shrunk in our lifetime, but the Fed has actually accomplished bleeding off a little bit off their sheet. Makes me wonder what's really going on to shrink that sheet.
And it's cost them probably by now almost $200 billion in losses. But don't worry, they don't have to report that, right? You know that. We'll worry about that some other time. But you bring up a good point. So I was watching this, and the big question, outside of what the language the Fed is going to use, are they going to get that, allow the reverse repo to go to zero? And right now what I'm reading is no, they're not going to let it go to zero. A lot of people, and I don't know why, but people keep talking about $600 billion, which would be, we'll be there in January, that the Fed would be in trouble here if they let it get too much lower than that, and that the quantitative easing cycle, that is going to end sooner than people think. It'll be interesting. Do we get a hint of no more quantitative tightening in this meeting? That would be something that would drive the markets, wouldn't it? Patriot Radio News Hour. We'll be back after the break. 800-951-0592. I don't care what happens today. I don't think we're going to get fireworks of any sort. But here is what I am definitely convinced of. All of these things, when we look at 2024, are we going to see dollar strength or dollar weakness? That's kind of, because that's what drives gold and silver. It's not the only thing, but that's the main driver. You saw very briefly how fast it can go, didn't we? When the Fed was in cut rate mode. If we would have had an unemployment rate, if the striking workers hadn't returned, we could be looking at a very, very different gold market right now. And again, I've said it all for the last week. Be happy it's this low right now. Be happy about it, because it's not going to stay there. Every single indicator that we look at, is the government going to spend more money or less money? Well, that's an easy one. More. And we know, right? We know the Treasury needs to borrow more money. We know we know they're going to give out money. We know it. The central bank. How much longer can quantitative tightening go? Now, right now, they've been saying, "Oh, we got plenty of time." They don't. They don't. Quantitative tightening is going to end in 2024. The question is when. I don't know that answer. How low are they going to let the reverse repo get? Are they going to let it run completely out of money? Which would mean, okay, then quantitative tightening won't end till the summer? Or are they going to do it earlier than that? Right? And not run it to zero. That we don't know. People are speculating that they're not going to let it run to zero. I don't know. I don't understand. I don't pretend to understand the ramifications of it. People smarter than me can make that choice. The economy is slowing, and we'll get to that in a second. And it's slowing real fast. I know it doesn't look like it. Believe me when I tell you, it's slowing a lot faster than most people think. And I think you better get ready. Today, we've got two great items, and we've heated them way up. First, rolls of U.S. Silver Eagles. I'll tell you right now, these are back dates. They're sharp looking. Sharp looking. $580 a roll. That's $30 a roll off. That's $1.50 off. Silver is pretty much unchanged. It's down 10 cents. $1.50 off. $580. It's been a while since I've seen Silver Eagles below $600 a roll, and it never lasted. I don't know. Again, this sale may be over before the day's over, right? I don't know what Jay Powell's going to say here, but $580 if you want to buy a case. It's 25 rolls. That's 500 ounces. $14,375. So that's like $575 a roll if you buy it by the case. These are huge sales in silver. And then on the $10 Liberties, $1,095 on the $10 Liberties. Remember, yesterday we were running the 20s. You buy 20 or more, $2,200. Well, today, guess what? Two $10 Liberties, $2,190 at 800-951-0592. This is a great opportunity. Again, I don't know today, right now, silver and gold are holding support levels. Assuming that things stay dovish from Jay Powell today, my guess is we can get around. If it doesn't get dovish, it may go down a little bit. It's okay. It's okay. Think about it. You're buying silver at like $1.50 less. You're buying silver today like silver's $21, Jason.
Yeah, so I have some live here in Colorado, and you can
I've got some live here in Arizona.
You can essentially pick them up today. I mean, if you're wanting to move fast, you can essentially pick most of these up. We sell a lot. We have to order as many as we can get in and to sell out. But yeah, these are ready to go. Silver Eagles below $600 will at some point in the future just come to an end. And I can attest to silver at $300 a roll, Silver Eagles at $300 a roll, or $400 a roll, or $500 a roll. All those levels. It bounced around. Oh, it's 320 one day, it's 290 the next day. Eventually 300 is behind us. Same thing happened with 400. Yeah, it was above 400 for a while. Then it dipped back below. Oh, here's a roll for 390. That's kind of what we're playing around with here, Jory. Your last couple of opportunities, maybe your last opportunity, depending on what happens to the markets, to get Silver Eagle rolls for less than $600 a roll. Because when things were really going crazy there for a while, a couple of years ago, we were moving towards $800 a roll with those ridiculously giant premiums, which could be back on their way coming when the silver market becomes more scarce again. So here you are. If you're one of those guys that's looking for a low point to buy silver, this is pretty much it, right, Joe? This is a great place to come in.
And silver, just the big thing is there's no more extra. It took a couple of years. The last 2 years, 2022 and 2023, wiped out for 11 years in a row. Silver, they mined more silver than what got used. And you're thinking about, man, we used a lot of silver. We did. That has ended. Because you got to remember, silver used to be, like Jason said, $4 or $5. Most of the mines can be profitable at $10 or $12. So you had silver, 13, 15, 18, $20. They were mining the crap out of it. Well, guess what? That silver's gone now. And because of inflation, right? Hey, we can't be profitable at $15 silver, right? We can't be profitable at $20 silver. The amount of mine supply coming on just isn't there. And in 2 years' time, just 2022 and 2023, they wiped out all of the 11 years of surplus. It's all gone. I think 2024, we're finally going to get that push in silver that a lot of people have expected, because now we're going to be in deficits with no excess supply, which normally means price goes up no matter what gold or the Fed does. I love silver right here. 800-951-0592. 800-951-0592, Patriot Radio News Hour, the Super Silver Sale, Silver Spectacular. Rolls of Silver Eagles. And these are back dates. Go look around. Everybody wants to sell back dates for 34, 35. It's ridiculous. Not here. $580 a roll. No, you don't have to buy 1,500 ounces to get that price. Buy it by the case. $14,375. Take your price down to $575 a roll. It's just a huge opportunity. And so, listen, silver had a great year this year. It did. It's had a great last 2 years. And it's still way undervalued. And now supply and demand always ends up winning out. And I think the supply and demand fundamentals for silver just get better now with all of that inventory wiped out. And then on the gold side, $10 Liberties. How can you go wrong? $1,095 at 800-951-0592. Now, I got a buddy. This is what he does for a living. He's an independent contractor. And he's got contracts with several of the largest property management companies in the state of Arizona. He also has contracts with the vast majority of car dealerships, especially, by the way, I don't know if you've noticed, but a bunch of cars, and I'm talking about not the new cars, the used cars, a bunch of used car dealers have gone out of business here. Check it out. Look it around. The subprime lending, gone. This is a thing to unfold. And then also does garnishment. So let's face it. When you're looking at, hey, how's the economy doing? Well, what's going on with evictions? What's going on with repos? And what's going on with garnishments? Those are usually good indications of how things are going. And he said to me, he goes, it's insane right now. Record-breaking evictions. I know October was a record. Now, it's going to fall, November, December, because people got, it's Christmas time, so you'll still see it. You'll see it come down. But they'll still be 6,000, 7,000 a month. But he was telling me 2024 is going to be a record year for evictions in Arizona. A record. And again, that you don't see it, right? Because there's tons of people moving here. Rents are a fortune, right? But something's breaking here. Repos. While he was sitting in my office, because he was doing some business before he came to talk to me, he got a text saying, hey, I got 2 more repos for you to do, while he was just sitting in my office. Repossessions. And Jason, he was telling me, he goes, Joe, these people, they're not even getting past like the first payment, and they're getting their vehicles repossessed. And of course, interest rates are killing people, because if you don't have perfect credit in auto loans, then it's trouble. And now he was telling me, auto loan standard, you could have 3, 4, 5 repos, and they'd still give you a car loan. Now, would it be for a lot of money? No. Would they charge you 30%? Yup. Because they knew, well, if you default, we'll just get the car back. They won't even do it now. He goes, it's incredible that for people now that used to, hey, I can get you a loan. I don't care about your good credit, bad credit, no credit, come on down. That's gone. And then garnishments. That huge uptick. And you know what he was, the funny part that he was saying, he goes, I'm used to doing garnishments for people that, they don't make a lot of money. Right? They make $30,000, $40,000, maybe $50,000, and they got in over their head. And he goes, the amount of garnishments I'm seeing at the 100,000 plus level, it's just mind blowing. He goes, it's just so different. You used to hardly ever see garnishments for people over $100,000, and now they're just pouring in, Jason.
Yeah, this is what happens when you have what the situation has been going on over the last few years. The inflation and the interest rates going up. This is what causes the stress. Joe had just talked earlier in the show about, the 3% loan and on a home, a mortgage, and versus a 7%. Well, it doubles the price or more. You can't buy a car, which, used car prices was the number one asset class in 2021 because the prices were going up. Think about this, an asset that deteriorates in price as you drive it, right, Joe, as your car, and they were going up at such a tremendous value, and that's because of the inflation. And then the loans come in, 5%, 6%, 8%, 10%. I don't know what it is for you to get a car loan now. It's depending on your situation. And you're not going to be able to afford this for very long. And here's the thing. When you bought the car, the average person is not a dummy. They're like, well, here's the money I got coming in. Here's the money going out. We really need a car. This fits our budget. And 3 months later, the grocery bills are cutting into that car payment, and they got to figure out what to do because you can't eat your car, right, Joe?
Car insurance up 20%.
Insurance too, 20%.
Yeah. That was on, we were talking about CPI yesterday. I didn't even bring that up. That was car insurance up 20%. That's another thing that my buddy talked about. He talked about it, even said, right? They can't even afford the insurance on these cars anymore. How about this just hit? Etsy. So yesterday we talked about Hasbro laying off 20% of its employees. Etsy says they're laying off 11% of their staff, citing very challenging environment. And again, this retail sector not looking very good at all. 800-951-0592. Final segment. Jason and I are going to wrap it up here. 800-951-0592. Joe and Jason wrapping it up here on this Wednesday. Obviously, tomorrow we'll focus in on the Fed and what they have to say. We're not expecting much. I think any hint of softness out of Jay Powell, I think Wall Street will pounce upon it. But we'll see. We'll see what happens. But the big silver special today rolls a U.S. Silver Eagles $580 a roll. Buy a case or more. That's 25 rolls. Save $5 a roll. $14,375. And then on the gold side, the $10 Liberty, $1,095. Put your cost below $2,200 there. 800-951-0592. Jason, what do you think? I'll put you on the spot a little bit because we don't know. Hawkish, dovish, or a little of both?
Well, I think they're going to keep the rates the same, Joe. I don't see why they're going to want to move either direction. It's kind of obvious when you don't have anything really blowing up massively at this moment in time in either direction. They've already paused. Pausing is safe. Pausing is more of what Jerome Powell likes as well. We're going to look at the info, the data. We're going to look at the data, right? They want to look at more data. That's right. We're the data looking. So that's a sideways thing.
We're going to keep looking at data, right? Yeah, I think we're getting a little of both. I agree. There's definitely not going to be a move today, but I guess I'm expecting a little bit of both. He's going to be a little hawkish and higher for longer, and I don't think he gives up on. Well, we could still raise rates because why would you take that away, right? Because you don't know. Well, I'm not going to say that we won't. I think that'll stay. But I also think he'll also be dovish as well. And again, right, well, we'll look at the data. If the data says we got to make a policy change, we will. And this is the problem. They're not setting policy. They're letting the tail wag the dog instead of the dog wagging the tail. And this is how you get into these messes. And this is why they're always late. I think this is the one thing that I think is going to disappoint Wall Street and why I expect Wall Street to take some lumps is by the time he finally realizes he needs to cut rates, it'll already have been too late, Jason. Kind of like when he was supposed to start raising rates. It was already too late by the time they realized it.
It's kind of too late for any decision to actually make any differences as far as fixing us to an honest economy that fixes it for the people, for the citizens. The higher rates, lower inflation, or the lower rates save the markets. Higher inflation is the only choice they have. And the whole soft landing thing that they keep talking about, all soft landing means to me, Joe, is kicking the can down the road. All the decisions they've made have been to try to slow the inevitable, which is a massive crash and massive inflation. And usually when you have things like this, you have a war or some major event that comes in, and then you just blame everything on that. I mean, look, to this day, here we are moving into 2024, and they're still blaming everything on COVID. It wasn't COVID's fault. It wasn't Vietnam was not the fault, right, Joe? It was the economy going down, and we were going to bankrupt this country, and Nixon took us off the gold standard, right?
Yes, you got it there. 800-951-0592. Jason and I, we're coming right back with the half-empty cup. We're going to do a little movie review that the Obamas put out. We'll talk about that coming up next.